You know.
Yeah, nice segue with all the coverage on metals because Bill Downey's with us at goldtraders.net. So Bill's in the house.
That's going to be very interesting then.
Yeah,
okay, I'm looking forward to hearing his views.
Yeah, he's an excellent technician. So Bill, I want to welcome you to our community, and I'm now making you the presenter. So looking forward to hearing your voice and seeing your charts. I had a look at some of the things you sent on Twitter yesterday. I can't wait to talk to you. You sound a bit different than most gold people.
Well, thank you, Dale.
Hey, Bill, so nice to meet you.
Nice to meet you, Dale.
All right, great to have you here today. And you know what great timing. We had that breakout over 1,300 in gold, and I've looked at some of your work, and you know, you talk both sides of the market, Bill. That sets you apart from most people in the gold business. You know, their philosophy is don't wait to buy gold and wait. Ever hear that one?
I've heard that one before. Certainly.
Yes. Yeah, and you know, and you have lines in the sand where bullish scenarios do not come in, you know, can be negated. So I read a little bit about your bio. Perhaps you could give a little description of how you came to believe in hard money, and you know what your prior life was and who your influences were. You know, I know when I was new in the business, guys like Doug Casey, crisis investing, you know, I cut my teeth on things like that because in the late 70s we had another bull market in gold, peaking on the invasion of Afghanistan by the Russians. And I even noticed on one of your charts, you go so far back that you show that 880 peak in 1980. So I'm going to be interested in whatever you want to share here.
All right, well, let me give you a little bit of background about myself. While I try to, for some reason, I've lost the screen once you made me a speaker, and I'm trying to get
maybe
back.
You're showing, I mean, I'm seeing your gold weekly report. So you're able, if you use multiple screens, perhaps you're showing the wrong screen.
Okay, and again, I'm not sure. Just let me give you a little bit of background while I try to find the site that I'm at here.
Okay.
Basically, my introduction to metals was after the 1980 run-up, and
Right.
this gentleman got me interested in silver, who was buying physical silver. And I made a few trades, and of course I lost some money. And there's a guy named George Angle who had written books.
Familiar with him. He was an options guy, wasn't he?
Yeah, he was an options guy. And he spoke about technical analysis, and I started looking at charts. And from there, it led me to Larry Williams, who had published a book called How I Made $1 Million Trading Commodities. And from there, I started looking at chart patterns and studying charts and cycles. And then I ran into an ad by Martin Armstrong in the Wall Street Journal in the 80s. And I started receiving monthly publications from him. And that's really where I got totally interested in charts and cycles. And from there, I just basically, over the years, have, you know, from looking at so many charts and reading so many books and seeing what others had, I
Good choice. You made some good choices on, you know, who influenced you. Martin Armstrong is one of the, in my, you know, extremely accurate and humble opinion, one of the greater minds of markets. And
he really is. He really is. And his discoveries and his database background just really made an incredible influence on me. And I learned quickly.
I tell you what, Bill, I see you struggling a little bit. What I'm going to do is I'm going to take you off being the presenter, and then some reason. And then
Yeah, for
make
some
me
reason, I
the
am
presenter, and then make you the presenter again, and you'll just see a share screen thing pop up. But first, let me take it away from you first, and
Yep.
then. And anyway, I wanted to show everyone your website, although you might do it later. Here's Bill. And your background was in manufacturing, disk drive, and the late 80s had you thinking about Armageddon. So now I'm going to make you the presenter again, Bill, and the screen share option should pop up, and then you choose which screen you want to show. See if it works for you this time. It'll say share screen. Okay, so we can, okay, there you go. There are your goals. There's your charts.
Okay, now I'm starting to get the gist of it. Well, the one thing I wanted to do first off is to say that the only concern I have about the current rally is that gold is still acting in a way that it has been during this bear market. As you can see by this chart, gold has been making August and or September highs almost every single year except 2015, where we made the high very early in January. And
Interesting.
that's the only concern that I have about this market is that the seasonal patterns in gold usually it's not a situation where we see new yearly highs in August or July or September when we're in a bull market. What we usually see is lows. Now, I was really excited in July when we tested the moving averages, as you can probably see on this chart here. And in July, we went down to 1205, right where the long-term moving averages are.
Yes.
And the moving average I'm using is a 34-month on the blue, and the red is a moving average of the moving average, okay? And not, I've never seen anyone else using that, but as you can see.
You mean they're both 34?
No, the red is a 13-month moving average, or 13-point moving average of the 34-month. I've never seen anyone else using this. But as you can see, when the blue moving average is above the red, we're in bull mode. And when the red is above the blue, we're in bear mode. And right now, they're converging right at the 1210 area. They're within $1 of each other, so I'm anxious to see what the new number is going to be after the close of August here tomorrow. Basically, if we can get the blue line over the red by a buck or two, and with the price above it, it should be giving us a buy signal. But again, my only concern about this market is that I don't like August highs, and that is what we were doing right now. The one thing that is different is there's this downtrend line that you can see that we're actually moving above it. I'm going to show you another chart here. In July, and we tested the moving averages. In July, they were at 1209 and 1214. You can see we pulled into this wedge here, and I was really, really bullish when I saw us test 1205, reverse, and then close on the highs in July.
Right.
And you can see this wedge that price has got.
So you would, after that July low, you would have preferred a pullback in August instead of breakout in August. Am I reading?
I would have preferred not making a new yearly high.
Okay, got it.
So that is just my one concern. With that said, we are breaking above the downtrend line that has been in effect, and it's really the only downtrend line in all of gold, taken off the 2011 and 2012 peaks. And as you can see, the last 16 months, I've been on Twitter showing this line over and over again as the line that we need to take out. And so, with that said, we are breaking above that line. What I'd like to see to really confirm is we're testing the 1322 area, and that area was, you may recall the crash in April of 2013 when we dropped 150 bucks. That low that day was at 13.22. Okay, and so what we've done here is we've retraced back to that April crash, and now it really comes down to whether we're going to be able to break above 13.22, as well as the Trump election night high of 13.38. That to me is significant resistance, and closing above that, there is one other number, and it's Martin Armstrong's number. He says a monthly close above 13.62 would, for the most part, give us a strong odds that the low is in place for gold from December of 2015. And what I'm going to do right now is I'm going to show you.
You know, that's an interesting point you bring up, Bill, about, you know, trying to take out the election high, because certainly many things have retraced or taken out the highs. The dollar, euro, and a lot of sectors have given up the Trump rally. So it's almost like gold has been lagging the weak dollar move.
It really has. And one of my friends, Greg, who's a fundamental guy, him and I exchange a lot of ideas. I'm the techie and he's the fundamental guy, and he's been pointing that out, that with the dollar down significantly at 10%, we should see gold at higher prices here.
Right.
And so,
how about the shares, Bill? To me, maybe up until this week, they've been lagging fairly dramatically, the mining shares. And
they really have been lagging.
No?
I do have a chart I could pull up on that. Let me see if I can just find it. If the bull market in gold stocks has resumed, then we're most likely just at the beginning.
Okay.
I think what we're seeing is that, keep in mind that mining companies are managed by people who have to make profits, and they made a lot of mistakes during the bull run from 2001 to 2008 when they bought a lot of
hedges,
small companies, and
debt. They took on a lot of debt.
Yeah, kind of a lot of debt, and some people got really seriously burned in gold stocks. And once you've been burned twice, if you've been burned in gold stocks, they become something that you're very leery of. Gold stocks, you're either going to make a killing or you're going to get killed. It's a very, very difficult market. And as you can see, even the rallies themselves are very erratic. We had that big crash over here in 2008, and then a final rally up into 2011. However, if gold does close above on a monthly basis 1362, I think you're going to see the gold stocks react, and I think you're going to see people coming in who are buying stocks now, because I think what you're going to see is, I think you're going to actually see the Dow reverse in a not too distant future. We have the seventh year of a decennial market is almost always down. There's almost always a big correction. And, you know, as far as I can see, if we look at the Dow, although the chart says target 22,890 to 23,030, this is a Twitter post I did on August 1st. The odds favorite price point for a peak on the Dow is at 21,890 to 22,030. Interestingly, the July close was at 21,891. We did exceed 22,030 in August on an intra-month basis, but I can see that we're below that. But the key is this major resistance line since 2009 has held all the rallies and has formed all of the corrections in the market. So I think what you're going to see is the Dow, the odds are very high that we're going to get a sell-off beginning soon. I think as early as after September and October, look very risky to me in many cycles that I look at, as well as other people. And I think what we're going to see is we're going to see a big pullback off of this major resistance line that we have, possibly down to the 20,000 area, but it could be deeper. Once stocks begin to sell off, I think that's when you're going to see people jumping into the gold stocks. They're going to be looking for different areas to invest. And I think that is the sector that's going to come forth if gold can give us the follow through that we're looking for here, which is that monthly close above the Trump night 1338 and then Martin Armstrong's 1362 level.
All right, so I noticed, Bill, that monthly closes are very important to you. So I believe in them too. I look at weekly closes for direction, like 2-week reversals and so forth. So, but I have seen time periods, just like you did before the new high in the gold shares, where when the Dow sells off, that gold stocks and gold can remain under pressure. And let's face it, they've both been rallying together. So, you know, everyone's looking and does look for it to be, you know, a negative correlated asset, but it isn't always that way, is it?
No, it's not. And the 2008 crash basically was a liquidity crisis.
Right.
And when you have a liquidity crisis and you're getting margin calls, everything, well,
Yeah, you have to sell the kitchen sink. You have to sell the kitchen sink to raise cash.
Exactly. The baby goes out with the bathwater. And I think that that crisis certainly gold crashed down to 680 and it took the gold stocks down with it. Everything went until the Fed stepped in and just printed their way out of that situation.
This time, though, you think is different, that the fear in the market, the VIX being at historical lows, or they were there, that the flight is going to be out of the dollar, just like the trend that's already in force, and into gold.
Exactly. And I want to show you a chart here that this was from March 28th.
Yeah, I've seen that. Yeah, it's interesting.
On the political cycle behind the U.S. dollar. And as you can see, when the Republicans are in office, and they're supposedly the conservatives, the dollar does not do well.
They conservatively trash the dollar.
Well, they cut taxes and raise spending anyway. And if you really want to look at the deficits that the United States has, the Republicans hold the majority of it. Again, because they cut taxes and raise spending. At least the Democrats, and I'm certainly a conservative person, more than a liberal person as I get older, but the Democrats at least raise taxes, and for some reason, and I don't understand all cycles fundamentally. My friend Greg has certainly talked to that, but the data shows that when the Republicans are in office, the dollar does not do well at all. And as early as the 5th of January, we were calling for a dollar top at the 105, 102 to 105 level. That rally that we saw from 2016 on this chart, actually the rally started in 2014
right.
at 80 level. There was a liquidity squeeze that took place, and I think above 103, 105, a liquidity panic would develop globally, because 65% of all debt is denominated in U.S. dollars.
Good
and
point.
As that dollar was rising, the tremendous move that it had was really people coming into the market to protect debt positions that they had, because the higher that dollar goes, the higher it was to sustain those debt payments.
Okay, so you have some interesting support levels here around 88 and a half or so. You think that's going to, so I know there are still some dollar bulls out there that are looking for that type of liquidity crisis you just described, the strong dollar being the catalyst for it. So something's going to have to come out of Europe for people not to want to be in the euro anymore. I'm not sure what that could be, but 88 and a half might be a good buy zone if a contrarian type dollar buy down there.
It's certainly an area to be looking at. The move down has been strong. We think that they're trying to re-liquefy the globe right now.
Right.
And really, that is their only shot out of this, is if they could somehow re-liquefy and
debase the dollar to make it easier to service debt.
Not only that, but to when there's liquidity, what they really need is somebody to be stepping up and investing and getting people to buy more things. We need non-discretionary spending to rise in the in the global nations. I mean, housing, food, clothing, and shelter is the basic staple, and that is not what is really needed to invigorate the economy. What you need is non-discretionary spending, extra money to spend in order to be able to stimulate real global growth. And that's another thing. We talk about global growth, the good old inflation, deflation debate.
Yeah.
This is the commodity index to CRB. Commodities is what everybody uses. And
right.
The deflationists, their line is, if you really look at this, we are sitting at 40-year lows in commodities. And I think the inflation-deflation debate is one where there's a mistake when we say inflation versus cost of living. There is no doubt the cost of living just keeps going higher and higher and higher. But I think that is a factor that is being caused by the tremendous amount of taxation that is being introduced and the regulations that government imposes upon business, which makes their cost of production much, much higher. I live in Canada now. I've been in the United States for 40 years. The regulation here is it's anti-business. It's just incredible what it does to stymie us. But the bottom line is,
where in Canada? In Canada, they're more. Okay. There's more red tape than the U.S.
And probably more red tape than Europe. It's just incredible.
I thought California would lead the way because I say California is a state where you need a license to get a license.
Well, you know what? You're certainly right about California. It is the poster boy model for regulation. That there is no doubt about it. But my point is this: if gold is going to rally, it has never rallied without commodities following it. And if there's a debt crisis, well, first off, if there's a resurgence in global activity in GDP, we're going to get a commodity rally and we're going to get a gold rally, because gold rallies when commodities rallies and when interest rates go higher and when things are accelerating in that manner. I know that the street always says, oh, the worse that the economy gets, the worse it's going to be for gold. No, it's the other way around. Inflation or global expansion, gold leads. If you do any historical research, you'll see that higher interest rates mean higher gold, whether it's in a panic mode like it was in 1976. And if it is, and that is what I think is coming, more so than a global expansion, I think that we're going to roll over here, and I think it's going to come from Europe. Italy is already talking about bringing currencies back. We know the Greece situation. I think there's going to be a debt liquidity crisis, and this time, I think that it's going to go into gold, and commodities. Commodities are going to rally in a panic. That's what everybody's going to run for. But if you see this line,
so not a no one wants paper. They all want stuff.
and that's exactly it, Dale. The shift from from soft paper assets to hard assets is coming, and I don't think it's that far away. I think we see it beginning. The Canadian dollar, which is a commodity dollar, peaked about a year ago. It re-rallied. It had a secondary bottom at around 137, right when the dollar peaked in January, and it has been rallying pretty hard.
Right.
And so moving higher. So I think that that's actually leading gold. I think that the situation in gold is it's the report card of the world, and through swaps and through using paper gold and being able to short on leverage like the central banks are able to do on the COMEX, I have to believe, my friend Greg has convinced me that there is, I'll say manipulation, but
the paper market. So that, that's why Sinclair started that exchange in Shanghai for the emancipation of gold. Is that what you're
and I think that everybody didn't understand the level of how deep these guys can go. And but I think that the shift is coming. And the one thing, though, that we are going to have to see, we can see the political cycles right now with Merkel in Europe, with Trump in the United States. We can see all the civil unrest that is emerging globally. Okay, all of these cycles suggest that a trade war is going to start taking place, and that eventually it's going to lead to some type of global war, whether it's drones and robots fighting it or what. I don't see it. I don't see the Earth getting wiped out, but I do think that some very, very hard times are coming, and I think we're going to see a liquidity crisis. I think we're going to see a rush to commodities during this crisis. What we're going to see is companies going out of business, deleveraging. I think there's going to be a need for liquidity that's not going to be able to be provided. And when the masses capitulate, the tipping point comes when they lose confidence in the entire system, then gold is going to have its run.
When they don't get their Social Security checks. I'd like to wrap it with this, Bill. I know you're talking about gold, but we brought up the gold-silver ratio.
Yes.
Here today. Okay, go ahead. You could finish this. So you're looking for like 2032. Gold will be priced in yuan to about 25 grand. Okay.
Yeah, this is the long-term chart. You can see in 1869, the price of gold actually went to $162 an ounce.
Yeah.
And that was when
after the Civil War, the deepest depression we ever had.
Exactly. And I think that there's a repeat coming of that. The reserve currency has its time. It's usually 70 years. And I think the only thing that is really stopping the yuan from taking over is China is going to have to establish a global bond market. Once it does that, and their credit becomes good worldwide, then I think what we're going to see is a shift. The commodities are not going to be based in the United States. They're going to be based in China. And
are you in the camp that they're going to back the yuan with gold, and that's been part of the reason they've been doing the hoarding that they've been doing over the last 10 years?
I'm not in that camp. I'm not in that camp at the moment. I believe that they are hoarding. They are followers of Martin Armstrong. That was the first place he went when he got out of jail, was to Beijing. I believe that this crisis, liquidity crisis that's coming, is going to be happening with the US dollar as the reserve currency, and that China is going to step in once everything crashes and establish a new central market. I think the 21st century is going to belong to China in the same way that we took the place of England in the 20th
Right.
century.
Yeah, and that
So-
was not an orderly transition. It was followed by World War
Exactly.
and a depression, right? And that was Anglo to Anglo. That wasn't a shift from an Anglo-based system to something out of Asia. So could be pretty rocky. Do you have a view on silver gold? Will that gold silver ratio begin to work for people that are long silver, looking for silver to outperform gold? They've been looking for that forever.
It will, but it's going to happen in the second
Final
half.
stages, huh?
Well, the final stages will be where it really blows off, definitely. But I think we will see that ratio begin to stabilize, and we will start to see it looking better. But it's going to be gold first, silver's going to follow, and then when the speculation grows and grows and grows, then the move is going to be over into silver.
Okay. So, Bill, your business model, do people purchase physical gold through you, or it's more of a timing service for trading the metals? Maybe you could show your website, and so that people that have an interest in what you talked about today can follow you. Your Twitter handle is at goldtraders.net. Is that correct?
It's at goldtrends.net, www.goldtrends.net.
Yeah, goldtrends.net. And so can people buy physical through you, or what?
No, I try to stay out of that. And I just what we
Okay,
do
so
is
you're like an advisory service with a specialty in precious metals.
That's correct. I did give a long-term buy signal in December of 2015, and I did suggest for people to be buying gold at the 1150 area in 2016, at the end of 2016, as well as platinum at 950. What we do offer is we do offer signals, trading signals for short-term trades.
Oh, cool.
Where we send out, two or three times a week what's going on. We're about $90 ahead per ounce in gold, and we're $3.56 above in our silver trades this year. So we have this short-term trading signals that we do use, as well as a weekly commentary that we have where we discuss the bigger picture in gold. And we do follow cycles, short-term cycles. I'll show you one quick one before, if I can.
Sure.
Hold on just 1 second.
So with your belief on what's going to happen and some harsh times, have you, there's one thing to have financial survival, and you're talking about the fabric being ripped apart and social unrest. Do you live in a rural area or an urban area?
Well, I lived 40 miles from Boston for 45 years. Right now, I'm living in a town that has a population of 400. The nearest city is 50 miles.
Okay, so that's right. You went to Canada. Was your move to Canada because of what you see coming?
Yes, it was that. There was also an opportunity here for me to take over a cooperative of fishermen, people that I grew up with as a child, who were in trouble, and they offered me a chance to run it and take it over and try to get them out of bankruptcy, which is what I've done over the last 4 years, and we successfully sold the company and got them all their shares back this year. And so that was part of it too. But yeah, I mean, I grew up here as a child, and we always used to come back for vacation, and I always used to say, someday I'm coming back here. Okay. And with what was going on in globally, as well as, in my personal life, it was just the right move for me to make.
Okay, Bill, well, you know, I gave you some visibility, so I want you to save me a spot in your barn for when when everything hits the fan, all right, buddy? And what a great presentation and excellent insights into the metals, both technically and fundamental views. And I'm so glad I reached out to you, Bill, and that I'm so glad that you accepted my invitation to address F.A.C.E today. And why don't we keep in touch as time moves on and the cycle begins to manifest, and get some updates for you down the road later in the year.
I'd love to do that, Dale, and I want to thank you for the opportunity of being able to speak to folks. And I just thank you for doing this, and I'll make sure that I spread the word of your seminars that you have, because I was listening to the guy before me, and I really enjoyed his. So I think I'm going to be doing a lot more listening myself as well.
You're always welcome here, Bill, because you are now my trading warrior brother. So thank you so much. Thank you so much for coming today, Bill, and edifying F.A.C.E. Everyone have a great day. Enjoy your summer, and we'll see you tomorrow. I know it feels like Thursday to me too, but tomorrow is Thursday. And we have a stock trader who also has a big reputation, Joseph Carnes, will be with us tomorrow. So most of all, everyone, don't just count your pips, count your blessings. Nice analysis trading by Blake Morrow and Steve Volge and Stelios. Thank you, guys.
Thank you,
Enjoy
Dale.
your day. Thank you, Bill. See everyone tomorrow.
Right.
Bill, I'll tweet this interview later and I'll drop it in your box. Okay, buddy?
Thanks so much, Dale. Hoping to hear from you again.
All right. Adios.
Adios, amigo.